Welcome back, ladies and gentlemen. In this video, we'll be talking about ethics, and in particular in the context of the accounting profession. So let's get started. So what are ethics? Ethics essentially refer to the set of moral principles and values that guide us when it comes to determining what is right and what is wrong. Now, when we talk about professionals such as doctors, lawyers, and accountants, it's generally understood that professionals are expected to conduct themselves at a higher level than most other members of society. We're expected to conduct ourselves at a higher ethical standard. Now, why is that? Well, there's a need for the public to have confidence in us. There's a need for the public to have confidence in the quality and the value of the service being provided by a profession. If we think about this in the context of audit, let me ask you a question. Who engages or who picks the auditor? The client. Who pays the auditor? The client. So the client company engages us and pays us for the work that we do. But the main beneficiary of what we do are the financial report users, the shareholders. So what is essential in that context is it's essential for the financial report users, the shareholders, to regard the audit firm as being competent, as being unbiased. It's only if they think about the audit firm as ethical and unbiased that they will believe the auditor has performed a valuable service. And that is the reason why auditors must conduct themselves at a high professional level. And that is why we even have a professional international code of ethics that we must abide by. So let's talk about that. APES 110 is the International Code of Ethics for Professional Accountants. Now, this code must be complied with by all professional accountants. This includes management accountants, financial accountants, tax accountants, as well as auditors. Now, it's very important for you to download APES 110 as we will be referring to it quite a lot within this subject. Ethics is an incredibly important topic, so please make sure that you have downloaded APES 110 before you come to class. APES 110 is broken down into three parts. The first part, Part A, relates to general application of the code. Part B sets out the requirements for members in public practice. Now, this includes all auditors within the Big Four. It includes tax practitioners as well. And Part C relates to members in business. Now, this relates to all individuals who are professional accountants within corporate businesses and non-for-profit organizations. For the purposes of our studies, we'll be focusing on Part A and Part B. Now, before I move on, a very important note to say is that APES 110 is also enforceable under the Corporations Act as well. So even the Corporations Act states that companies and accountants need to comply with ethical standards, and the main ethical standard is APES 110. Please remember to download this document before you attend class. Overall, accountants and auditors have what we call a fiduciary responsibility. And what that means is they assume a commitment to put the public, the client, the profession, and their employer ahead of any self-interest. Now, that's really, really important. Accordingly, all members of the accounting profession must adhere to the fundamental principles under APES 110. Now, here are the fundamental principles for professional ethics. So let's go through each one. The first fundamental principle of professional ethics is for accountants to act with integrity. Now, that refers to the need for accountants to be straightforward and honest in their dealings with others. The second is to act with objectivity. Now, this refers to not allowing bias or prejudice influence or impair one's judgment. It's avoiding conflict of interest situations that may affect one's decision making. The third one, professional competence and due care. This fundamental principle is about making sure that the accountant has the skill, has the knowledge, and has the experience to perform the task they have been given. It also relates to making sure they perform that task with thought and care. That's the due care component. The fourth principle is confidentiality. Now we must keep the information we receive from clients confidential. Remember, in the context of a financial report audit, we're dealing with financial statements of the client that have not yet been released into the market. So confidentiality is about making sure that you do not disclose any of that information or use it for personal gain or for the gain of others. Now, this particular principle also relates to things such as trade secrets. So, for example, if I was the auditor of Coca-Cola and I found out the recipe for Coca-Cola, I would probably stop drinking Coca-Cola, but I would have to keep those secrets to myself as well. Finally, professional behavior. Now, the best word to use when it comes to explaining professional behavior is reputation. Reputation is key when it comes to an audit firm because, believe it or not, an audit firm's greatest asset is its reputation. Clients select an audit firm based on its brand, its name, its reputation. Therefore, maintaining a good reputation is key. Even allegations can taint it, so it's very important to be careful and behave professionally. So this one's about complying with the rules and regulations and not engaging in any activity that will harm the reputation of the profession or the audit firm. So reputation is very important. Now, one final thing I'll say here. Reputation is linked to image and the image portrayed by by accountants or by auditors. Now, I want you to think about something. Think about whether you've ever seen an auditor or a professional accountant in their natural habitat, the office. Now, imagine what they would be wearing. A suit, right? Now, I asked my class this question last semester. I said, well, why do you think that auditors or accountants wear suits? And someone yelled, because they're boring. That's actually not the case, believe it or not. It's not because they're boring, because some of them are actually lovely. But dressing conservatively by wearing a suit, it's actually a marketing ploy because think about it. It portrays trustworthiness and professionalism. Would you trust an auditor who came to the client dressed in a suit? Or would you trust an auditor who came dressed in shorts and a t-shirt every day? Image is linked to reputation, and reputation is incredibly important. So that one essentially relates to that professional behavior principle that we've been talking about. Well done for making it through our video on ethics and the accounting profession. Let me know if you have any questions. Otherwise, please move on to the next video. Have a great day.